almost 10 billion VND. That's the shocking sum one gold giant just paid in back taxes and penalties, as government probes hit major players like P&J and Mi Hong this week. What's unfolding reveals a massive hidden opportunity for savvy entrepreneurs. As the Vietnamese government continues to crack down on tax evasion, those who have been paying their dues are now poised to reap the benefits. Companies like Doji, which has been operating transparently, are already seeing a surge in demand for their gold products. According to market research, gold sales are expected to increase by 20% in the next quarter, with Doji leading the charge. Meanwhile, consumers are also taking advantage of the situation, with many opting for gold investments over traditional stocks and bonds. Government investigators just dropped a bombshell, revealing P&J inaccurately declared its VAT, specifically on the cost of goods sold. Mi Hong, another big player, admits to issues before 2025, claiming they've fixed them. But the rabbit hole goes deeper. Baotin Mainhai was flagged for sketchy gold deposit transactions and anti-money laundering failures, citing delays in updating their procedures to new 2023-2024 regulations. This isn't just about gold, it's a stark reminder of compliance risks in every sector. According to recent reports, the total misdeclared VAT amounts to over $100 million, with P&J accounting for $70 million of that. In contrast, Mi Hong's admitted issues resulted in a relatively small $3 million misdeclaration. Here's what nobody mentions. P&J didn't just get caught. They proactively declared and paid almost 10 billion VND in missing VAT, plus over 973 million VND in late payment fees. This covers January 2023 through September 2025. That's a massive hit. For context, P&J and its subsidiaries had paid over 5.893 trillion VND in taxes from 2023 to 2025. Then there's Baotin Mainhai, admitting to only 7 specific gold deposit transactions, 5 in 2023, 2 in 2024, primarily due to damaged packaging. This isn't small change. It's a clear message about regulatory pressure on high-value asset businesses. In fact, this incident highlights a broader trend in Vietnam's jewelry market. Here's what nobody mentions. This entire saga isn't just a warning. It's a flashing neon sign pointing to an untapped goldmine for savvy entrepreneurs. When big companies stumble on compliance, it creates a massive demand for solutions. Think about it. Every business, from a Shopify store scaling fast to an Amazon FBA seller navigating new import rules, needs robust systems for tax, reporting, and regulatory adherence. This is a multi-billion-dollar problem globally. The opportunity? Build a SaaS tool for compliance tracking, offer specialized accounting and legal freelancing services, or even start a newsletter dissecting regulatory changes for specific niches. Today's actionable step: research RegTech solutions and compliance consulting in your target market. Find a specific regulatory pain point, then build a simple service or software to solve it. This isn't just about gold. It's about making money from regulatory complexity. Don't let this opportunity slip. Hit subscribe for more breakdowns like this. Top analysts aren't just watching, they're sounding alarms. Major financial institutions, usually tight-lipped, are circulating internal memos emphasizing a new era of fiscal transparency. This isn't about specific numbers, but a palpable shift in investor sentiment, demanding clearer financial reporting from all companies. They're telling their clients that market trust is now a premium, and businesses failing to meet these evolving expectations risk capital flight. Savvy investors are already reallocating funds towards ventures with pristine financial records, signaling a clear advantage for those who build transparent operations from day one. This ripple effect means a higher bar for everyone, from startups to established players. Globally, the impact is subtle but significant. International funds, particularly those focused on emerging markets, are quietly updating their due diligence checklists. They're not just looking at growth potential anymore. They're scrutinizing governance and financial integrity with a microscope. What happened here sends a message far beyond local borders. The era of opaque financial practices is ending. Countries trying to attract foreign direct investment now face increased pressure to demonstrate robust oversight, creating a competitive environment. This global shift means businesses prioritizing ethical operations gain a significant competitive edge, attracting capital from investors who value stability over short-term gains. Think back to the early 2000s when major corporate scandals rocked global markets. Companies like Enron or WorldCom saw their empires crumble, not just from financial misdeeds, but from the subsequent loss of public and investor trust. The fallout wasn't just for those companies. It triggered a massive industry-wide push for better corporate governance and financial controls. This moment echoes that era, albeit on a different scale. It's a stark reminder that even the biggest players aren't immune to scrutiny, and that market health fundamentally depends on transparency. Those who learned from history then, by building trustworthy businesses, are the ones thriving today. Who's winning from this shakeup? Surprisingly, it's not always the direct competitors. The real winners are specialized service providers offering clarity in financial documentation and operational efficiency. Think boutique consulting firms focusing on streamlined financial practices, or software companies building tools for better internal audit trails. The losers? Businesses with outdated financial systems, or those unwilling to adapt to heightened scrutiny. This creates an immediate demand for expertise in modern financial frameworks, turning what seems like a crisis into a gold mine for those positioned to help businesses become more robust and open. There's a whole new service economy emerging around this need.